The average senior homeowner overpays their property tax bill every year, not because they made a mistake, because there's one form that fixes it, and in most counties, nobody has ever told them it exists. These programs are real. Every state has some version of one, and the state will not remind you. There's no letter, no notice, no flag on your file the day you turn 65. The benefit only shows up if you go looking for it yourself. Make sure to hit subscribe and turn on notifications right now, because every week I cover the real financial information that affects seniors directly, the rules that changed, the protections you already qualify for, and the steps that actually make a difference. This is exactly the kind of content I put out every single week, and you do not want to miss it. Now, let's get into it. Let's start with a homeowner named Diane. She's 71, lives outside Fort Worth, Texas, and bought her home in 2003. By 2025, it was appraised at close to $340,000. She'd been paying her school district taxes in full for over 20 years. No complaints, no questions. Then her son mentioned, almost in passing, that Texas gives homeowners 65 and older a much bigger exemption on school taxes than most people realize. Diane had never applied. She went to her county appraisal district's website and found out she'd been eligible for 2 years and never filed. Diane isn't unusual. She's the pattern. Every state that runs one of these programs runs into the same problem. The benefit is real, the paperwork is optional, and most eligible people simply never hear about it. There's no national tracking system that flags a property record the day the owner turns 65. The county assessor administers the program, but nothing requires them to advertise it. The burden of finding it, filing it, and meeting the deadline falls entirely on the homeowner. What the form actually is, states use different names for the same basic idea. Senior homestead exemption, senior freeze, circuit breaker credit. The mechanism usually works one of 3 ways. It reduces the assessed value your tax is calculated on. It freezes that value, or your tax bill, so it can't climb even as your home's market value rises. Or it reimburses you directly for tax increases above whatever you paid the year you first qualified. Some states, like Texas, combine the first 2 at once. What the numbers actually look like right now in 2026 start with Texas, because the numbers there changed dramatically last year. Texas voters approved Proposition 13 in November 2025, raising the general homestead exemption for school district taxes from $100,000 to $140,000. At the same time, the additional exemption for homeowners 65 and older jumped from $10,000 to $60,000. Combined, that's $200,000 of a senior's home value shielded from school district taxes. And according to the Texas Senate's own estimate, the increase to the senior exemption alone is worth roughly $454 a year, with total combined savings for seniors landing around $938 a year in school taxes. On top of that, the year you turn 65 or the year the home becomes your homestead, whichever is later, your school district tax bill is frozen at that dollar amount. It cannot rise after that, even if your home's appraised value climbs for the rest of your life. The deadline to file is April 30th, and Texas allows you to apply late for up to 2 prior years if you missed it. In New Jersey, 3 programs now run through a single combined application called the PAS1, Anshore, Senior Freeze, and the newer Stay NJ program. Stay NJ covers 50% of your property tax bill up to $6,500 a year. After New Jersey's fiscal year 2027 budget passed in June 2026, that benefit became tiered by income. Up to $6,500 for household income under $100,000, $5,000 for income between $100,000 and $150,000, and $4,000 between $150,000 and $200,000, with the income ceiling itself dropping from $500,000. Separately, Senior Freeze reimburses you dollar for dollar for any increase in your property tax above the amount you paid in your first qualifying base year. The deadline for the combined 2025 application is November 2nd, 2026. In New York, a 2026 change to state law allows local governments to raise the senior citizens' property tax exemption from 50% of assessed value up to as much as 65%. It isn't automatic. Each town, city, or school district has to formally adopt a higher percentage, and each sets its own income limit within state guidelines. Deadlines are typically set by the local assessor, commonly falling around March 1st, so the exact date depends entirely on where you live. In Illinois, seniors can potentially stack two different programs. The Senior Citizens Homestead Exemption knocks $5,000 off your home's equalized assessed value with no income test at all, just age and residency. On top of that, the Low-Income Senior Citizens Assessment Freeze locks your equalized assessed value at whatever it was the year you first qualify, so it doesn't move even as your home's value rises around you. That one is income tested. The limit was $65,000 for the 2025 assessment year, payable in 2026, and it rises to $75,000 starting with the 2026 assessment year, payable in 2027 under a law the governor signed in December 2025. In a market where home values have risen sharply, the freeze compounds every single year it holds. In Florida, homeowners 65 and older with a household adjusted gross income at or below $38,686 for 2026, a figure that adjusts annually for inflation, may qualify for an additional exemption worth up to $50,000, but only in counties or cities that have specifically voted to adopt it, and only against non-school portions of the tax bill. Florida also offers a separate exemption for long-term senior residents who've lived in a lower value home for 25 years or more, which can eliminate county and city taxes entirely for those who qualify. The standard filing deadline statewide is March 1st, though most counties allow late filing into September if you can show good cause. Run any of these over 10 years and the gap between filing and not filing gets large fast. A Texas senior locking in the freeze this year keeps that ceiling for as long as they own the home, even as neighbors' bills climb. A New Jersey senior collecting the full stay-in-J credit could keep tens of thousands of dollars that would otherwise go straight to a tax bill. None of it happens without an application. The retroactive angle. This is the part almost nobody thinks to ask about. Depending on the state and the specific program, if you qualified in the prior year and never filed, you may be able to apply for those missed years too. Texas explicitly allows homestead exemption applications up to 2 years after the fact. Illinois' senior freeze application asks for the prior year's household income, specifically because eligibility is assessed year by year, and some counties do process retroactive corrections when a senior can show they qualified earlier. Diane, in our example, confirmed with her Texas appraisal district that she could apply immediately and start the tax ceiling from the earliest year she was eligible. The exact retroactive window varies a lot by state and by program, so this is one to confirm directly with your county assessor rather than assume applies everywhere. Why the rejection trap happens. Most counties run several senior-related programs side by side. There's usually a basic homestead exemption open to any homeowner regardless of age, a separate age-based exemption, and often a third income-tested freeze or credit layered on top. Each one has its own form, its own deadline, and its own eligibility rules, even though they're processed by the same office. File the wrong form or file the right one with something missing, and most counties will not call you to fix it. you get a denial notice, and by the time it arrives, that year's filing window is usually already closed. The specific section that trips people up, programs like Illinois Senior Freeze, Florida's additional senior exemption, and New York's senior exemption, are all income tested, and this is where most rejections happen. The application typically asks for total household income, not just the applicant's income, but everyone living in the home. And it usually requires supporting documentation, a Social Security benefit statement, or proof of enrollment in a qualifying assistance program. Leave that section incomplete or submit the form without the required proof attached, and is frequently denied outright rather than returned for correction. One missing document is often enough to lose the entire year. Deadlines to actually know. These are set by state or by individual county, and none of them show up printed on your tax bill. Florida's senior exemptions are generally due March 1st, with late filing sometimes accepted into September, depending on the county. New York's senior exemption deadline is usually set locally, often around March 1st, but confirm with your specific assessor. New Jersey's combined PAS-1 application covering senior freeze and SHAR and Stay NJ together is due November 2nd, 2026. Texas's homestead and over 65 exemptions are due April 30th, with a 2-year retroactive window if you miss it. Illinois counties typically mail renewal applications automatically to seniors who already have an approved exemption. But first-time filers usually have to request the form themselves, and deadlines vary county by county, often falling somewhere between spring and early fall. What to actually do, step by step. First, confirm eligibility before you file anything. Requirements usually include being 65 or older, owning and occupying the home as your primary residence, and in many states, staying under a household income limit. The specifics differ enough by state that it's worth checking your own state's rules rather than assuming. Second, find the correct form directly from your county assessor's or appraisal district's official government website. Search your county name plus Senior Property Tax Exemption 2026. Avoid third-party services that charge a fee to file paperwork that's free at the source. Filing directly with the county costs nothing. Third, gather your documents before you start the application. That typically means proof of age, such as a driver's license or birth certificate, proof of ownership, such as a deed or mortgage statement, and if your program is income tested, proof of income, such as a prior year tax return or Social Security award letter. Attach everything the first time. Fourth, ask specifically whether retroactive filing is available if you think you missed prior years. Don't assume it isn't. Ask directly and be ready to show how long you've been eligible. Fifth, find your own county's exact deadline today and write it down. Search your county name plus property tax exemption, deadline 2026, since the date can vary even between neighboring counties in the same state. Sixth, submit early rather than waiting until the deadline. Several of these programs review applications on a rolling basis within the filing window, and getting your documentation in early gives you time to fix anything the office flags before the window closes. One more thing worth knowing, you don't have to figure this out alone. Many counties have a senior services office or a local area agency on aging that will walk through the paperwork at no cost. And some states run free volunteer programs specifically built around helping older homeowners find and file the right exemption. If an application gets denied and you believe you actually qualify, most counties also have a formal appeal process, sometimes called a value adjustment board or board of review, and the window to appeal is usually short. So ask about it the moment a denial notice arrives, rather than assuming the decision is final. It also helps to separate the basic types of relief so you know what you're actually looking for. A homestead exemption lowers the value your tax is calculated on. An assessment freeze or tax ceiling locks that value or the bill itself in place so it stops climbing. And a reimbursement credit, like New Jersey's senior freeze, sends money back to you after the fact to cover an increase you already paid. Many states offer more than one of these at once, layered through the same office. And the biggest mistake homeowners make isn't picking the wrong one. It's assuming that filing for one automatically enrolls them in the others. Diane ended up filing 2 forms with her Texas appraisal district, the standard homestead exemption and the over 65 exemption that also set her school tax ceiling starting from the earliest year she was eligible. None of it required a lawyer, a fee, or a third-party service. It required going to the county's own website, downloading the right paperwork, and mailing it in before the deadline. This isn't a financial product, and it isn't a loophole. It's a benefit that's already written into the law in most states, sitting there whether or not anyone applies for it. The only step most eligible seniors skip is picking up the phone and asking their county assessor directly whether they qualify, and what, specifically, they still need to send in.